Folks, welcome back to the Contrarian Trader. This is Robert Desmond. It is Sunday, January the 17th, 2010. Folks, let's get straight to it. You'll remember last week I mentioned that the S&P 500 had broken above the 1130 level and had managed to close there. Now that 1130 level marked two significant resistance points. You had the declining downtrend line, that upper band, which coincided with the resistance point at 1130. So you had strong resistance there, and the volume that week was not high. It came in below average. So it was surprising that it was able to close there. And I questioned whether or not it was going to be able to maintain that rally coming into last week. And sure enough, it wasn't able to. I said if we would be able to make a significantly newer higher on the week, that we'd probably see a rally continuing into last week. As it turns out, we did see that those first few minutes of trade last Monday, we saw a higher high, an immediate give back of all those gains plus some, and we closed right at that now support level, previously resistance at the 1130 mark. So that's critical. That's critical there. If it breaks below that line, if it breaks below this line, it's going to get ugly out there. Now on Thursday, the reports came out from on retail sales, and for some reason or other, it was a shock to everybody on Wall Street, except for us and my members and those who watch me on YouTube, that retail sales came in lower than expected. This is no shock to us. Also, jobless claims, we had seen a gain in November in jobs and then a reversal and a loss. It gave up all those 11,000 jobs gained in November as if that was some great increase. And it gave up all those gains plus some, and we lost about 36,000 jobs in December. So all is not well. And the markets managed to hold on last Thursday. You'll see here, this is the daily chart of the S&P 500, and it was able to, this is Thursday here, that update where the 1150 mark is, it was able to hold those gains. And then on Friday, you had JP Morgan's news that came out. You got to remember that we're short the banks. Even though we have a hedged position on Goldman Sachs to the long side, we are short the banks. And I've been saying this for quite some time now. Watch out for these banks. They have not been performing along with the market since August. Let's take a look at the XLF. This is the ETF of the banks, and you'll note that since August we have made little to no headway. We actually lost ground, to be honest with you. So these banks are very, very, they're paper tigers right now, folks. As go the banks, so goes the market. So we need to watch out for the banks. You have earnings coming out in earnest on these banks this coming week. And if they come out disappointing, brother, look out below. Now, all you heard on CNBC last week is how earnings are going to come in so great. Take a look at this stock market. We have not had a 10% correction since March. Now, are you telling me that earnings are going to come out so fantastic that you're going to spike this market higher from this extended level? I don't think so. We came into last week extended, and the markets are priced for perfection at this point. And I sent out an email to my subscribers on Thursday evening. Watch the revenue numbers that are coming out from these companies. Forget about earnings per share. They've cut costs to the bone. Watch out for the earnings and sales. The revenue numbers and sales numbers, and particularly with Intel, which came out dynamite numbers on. Let's take a look at the chart on Intel. Dynamite numbers on Thursday. Watch out for their margins. They came in great. Watch out for the margins on these other companies. But I also told my members, even though we broke out above this resistance level here on Thursday, Intel is expensive. It's not a cheap stock, and it's not a huge grower. And you have a huge margin gain. It's going to be tough for them to maintain those margins. So be careful of profit taking on Friday. Don't chase this stock. Sure enough, it closed. It rallied in the after hours on Thursday, then it gapped lower on Friday and gave up all those gains, and now it looks like we're going to head lower on Intel. China, folks, I sent out an alert to our subscribers. We've been short of China since back here when nobody else wanted. This is the FXP. We've been short since back here. We're going to look to start adding more. It looks like the Chinese markets, they're going to start to roll over. I do not agree with the talking heads that China they can withstand this world depression that we're in. And yes, that wasn't a mistake. A depression. Uh, you're going to see a lot of bad news coming out of Europe soon. Greece, major problems. One of my subscribers just dropped me a note not too long ago, yesterday or Friday, saying that Italy was the next one to drop. So I'm going to look into that. So you're going to see pressure on the euro, and what that's going to cause is strengthen the U.S. dollar. So keep an eye on those two, because if you see a rally in the dollar, you got to remember that these earnings of these companies are so weak that a rally in the dollar puts pressure on their bottom line, because they depend upon whatever earnings they have, that revenue conversion, that currency conversion, drop into their bottom line, helping them to look better on Wall Street. If they lose that, that's a direct hit on their earnings per share, and their price to earnings multiples, they look expensive. So please be careful as well. This is the VIX. Folks, they sold it off on Friday. I sent out an alert midday on Friday to my subscribers saying, don't short this market. If you're looking to get short, wait till the final minutes of trade. The market was down 140 points when I sent that email out. Folks, I told them, don't go short until the final minutes to see if they rally this market back. Let's see if the shorts try to rally, go home flat for the weekend, I should say. And sure enough, that's exactly what they did. You see the reversal on the VIX. We're probably going to come back down, test this 1686 level. Let's see if we can hold it. I wouldn't be a bit surprised if they rally the market on Monday. I don't expect it to hold. I repeat, I do not expect it to hold. You're seeing the retail holders, which I've said, look out for these retailers. They're very, very extended. Finally, we've got this break here. Hasn't truly broken below that 93 level, and even more importantly, the 9150 level. We have broken that uptrend line. Now it's a matter of rolling over, and we are so extended at this point. I predict that any rally is going to be met with selling, and the selling is going to become pretty heavy. So, folks, please subscribe to my YouTube channel, get an alert of when I post a video, and please sign up for my 14-day free trial offer. If you don't like the service, please just cancel it. That's all. Give us a shot. We plan on adding to our positions this weekend, this coming week, I should say. And folks, I look forward to hearing from you. Drop me an email if you have any questions. And again, subscribe to our 14-day free trial offer. Talk to you soon. Thanks. Bye-bye.